Hello, good morning. This date is the 16th of September 2023. Welcome to today's forecast, the weekly forecast. It's rather coming late, but we're going to check our instrument and to see what the price is going to do and the direction of our trade. Now, we're going to be comparing our instruments. I want to look at the RSI, if we have divergence or not. First is to look at the US dollar index. Now, this is what we see as our second structure, the first wave, 1 and 2. And here is what we time as 3 and 4. And this is 5. That is about finishing, okay? And what do we expect? Now, on the third wave here, on the daily, we can see where the RSI is on the daily. And even though the price had gone much higher up here, the RSI on the fifth wave is still, there's some divergence to the, here that we can see the RSI had fallen. So this also is indicating a momentum loss, and which means the price is, due for correction at least. So if you look at the DXY, also on the DXY, on the third wave here, it's pretty much the same, just with a little divergence here, comparing with what we can see on the fifth wave. So now, if you're going to look at the euro dollar, it's going to be upside down, right? Okay. As you're seeing momentum loss, and this one is tipping to the downside, it will be to the upside on the euro dollar. So let's look at euro dollar. So on the euro dollar, now on the euro dollar, we can see that our presumed third wave is somewhere here. So the height of our third wave here, it's the low there is almost at par with what the fifth wave had given us now. So it's almost at par, and that also indicates a loss in the momentum. Okay, so let's look at 4-hour time frame. Switching to the 4-hour time frame. Switching to the 4-hour time frame. Yeah. So switching to the 4-hour time frame is there from here, right? So we can see that even from this point here, it shows that we have been correcting. From the point here, you can see clearly this wave that went up here and this one coming down. So that's the first wave here coming down. You can see where the RSI is, which is almost as equal as where the third wave here ended. This is the third, this is the fourth, and this is the fifth wave. So there's a clear divergence here. This is the third wave here at this point, and this is the fifth wave. So we can see that it's more apparent on the 4-hour time frame. So let's look at DXY. We are going to look at all these things on all the time frame to know if it's ready. Now, here on the third, that's the DXY here from this point. We can see how this one, fell here. So we're going to look at the top now. So from here, and this is the third. This is the third, and this is the fifth. So a divergence, you can draw your line like this across, so it's stepping down. So there's a clear divergence also on the 4-hour. So it's more apparent, which means that it's almost ready to at least correct deeply. Let's look at US dollar index. US dollar index. Looking at the US dollar index. Okay, this is the beginning of the commencement. So, and this is also the third wave here. This area marks the third wave is somewhere here. So to the okay, this is the fourth of the fifth. And of course, we are probably seeing the last wave. So there's also a divergence, even if you compare from here to this point, there's a divergence. So we are not seeing a higher high on the RSI, even though this one is marking a higher high on the RSI is low. So we can see that the price is warming up. Now, if you go to the 1-hour time frame, on the 1-hour time frame, we'll be focusing more. Let me first on the 1-hour time frame. So this area marks the third, and here we can see this is an area that coincides because there's a little let me bring out the drawing so for us to see. Okay, I think this one will help us better, bringing out the drawing here. So this is the area of the third wave. So there's a little push here. Okay, so around this area where we had the third, the fourth, and is the commencement of the fifth wave, or the fourth of the fifth wave here. So there's a lag in here. So, but also we can pick this clear divergence here. The top is picked here. There's another top here. So even from the second wave, we have been seeing a low here on the RSI and up to now. So it's pretty much corrective, and we are seeing that inside this correction, they were picking a peak here, and this one is a bit at the after the third wave, and the fifth wave is actually down. Now on the DXY, so on the DXY, of course, now this is from the going to the third of the third wave, which is here. Immediately after we pick the third wave, we'll be seeing the decline. Before the third wave, we have been seeing the decline before the third wave, and so this is the fifth. So you can see the height here. It's a bit lower here, so it's burning down also on the DXY on the 1 hour. So if you look at the euro dollar, let's look at the euro dollar also. If the RSI now looking at the euro dollar also, euro dollar, the fifth wave here, it's a bit down. So it's only on euro dollar that we can see that the divergence is not that apparent on the 1 hour yet, but on the 4 hour and the daily, we could see it. So we could see it. Now, having said that, we are gradually reaching the end of that wave. So we need all the instruments that we can get to interpret and what next we are going to do. Let's go back to the daily and begin our analysis. Now, on the US dollar index, we are clear on the third wave and the fourth wave here. So from here to here is the first wave, the second, the third, and the fourth. And here is the fifth. From here to here is the fifth. Now, we know on the daily that we are done with 1 and 2 here, and this is like a 3. Here also, instead of the 3, this is clearly the ending structure here for wave 3. So this is the way we see ending structure. It could also be like this. The ending structure could be like this when you see this doji and all of that. On that peak, and we have a correction or a retracement. Okay, it's a correction. We won't call it a retracement. A retracement, happens in between trades, in between, a trend. A retracement happens in between a trend, but this is a correction. This is also a correction, and this is also a correction. So, and here is where you see the wave 3 ending properly to give us a wave 4. And this is quite a big correction. It's big. It's big. The depth of this correction, wave 4 appears to be deeper than the depth of 2 here, but it's still the same. So this is a deep correction. So now inside of wave 5 now, we have a 2, a 1 and a 2. Then this is a 3, a 4 of that wave 5. And we are seeing now as the last set of waves before we correct. So no matter how deep you want to go here, we are due for correction, at least a deeper correction to the downside before we go for that hop. So, and when we are going to have that correction, we expect at least a 3-wave correction, because this, for me, is almost a complete cycle, and we don't want to buy now. No matter how high this wants to go, we need a correction first. And that correction will be big enough, at least a 3-wave correction before we go up. So now we know we're going to have a Fed meeting on US on Wednesday. So if the Fed meeting US, if it's going to favor the dollar, then we are going to see the dollar rallying to the upside. If that Fed meeting is going to favor the dollar on Wednesday. So now, if it's not going to favor the dollar, then we might see that correction happening on Wednesday. So it now depends where this is before Wednesday. So if we have a very deep correction, a 3-wave correction before Wednesday, then the Fed meeting is going to push this hard to the upside. So, but if there's nothing happening here, just dragging and dragging till Wednesday, the Fed meeting might push this to the downside. So now the meeting and the structure must align. That is what we are saying. The meeting and the structure must align. I don't expect a push-up from here, except we have a deep correction. So we're going to see what the structure is going to give us. But what we want to see now is a fall, at least for a deep correction, maybe to a 50% of all these retracements of all these moves. Now, we are clear of within wave 5, we have done 1, 2, 3, 4. 1, 2, 3, 4. Now, this is the wave 5. Now, within 5 of that 5 also, we're going to see 1, 2, 3, 4, 5. So we want to see that on the lower time frame. So on the lower time frame, this is the wave 4, 5 that we are seeing. On the lower time frame, we are seeing this one as 1 and a 2. And this is, instead of a 3, the third wave. And that's the ending structure on the third wave. And this is the fifth wave. Sorry, the fourth wave now. The third and the fourth wave here, that we had a deep correction. And now we are seeing this as the fifth wave. So let me bring out our drawing. So for us to be asked. So we can see this is the third wave, this is the fourth wave, and the inside of the fifth wave, 1 and 2, 3 and 4, and this is the last wave. So we expect this also to run in 5 waves. Now, looking at this last wave, where are we potentially going to go? So we probably want to get to the peak and do a correction to the downside. And from here, which is the end of the third or the fourth wave, so we see this move. Now, these are movements, these are, retracement, movement and retracement. And here we pick to get a correction of 2. And for us now, we are seeing this as a possible third wave of this move, and this is probably a possible fourth wave, and we want to see the last of it. Now, let's go inside one hour time frame, because that's where I'm going to be concentrating now. So how we're going to see this move on. So we said that this is like 1, this is like 2, and this is like 3, this is like 4. And we are seeing this move now as a potentially the last wave, which is the fifth wave, and where it's going to get to. Now, we may have seen this as the first wave of that move, and this is probably, okay, now. We may see this as the third wave, okay, and the fourth wave, which ended here. So this may be A, B, and a C of the fourth wave. So, and we can see that this is where we said 38 is. So price breached 38 or get to go to 40, and this is 50, which was not taken. So any breach below here will be an early indication that the price is done and it's going to sail down. So once we breach that, so we are potentially seeing the first move right from here to this point as a wave 1, and what we are seeing here as a wave 2, and probably this one is going to a wave 1. So it's more or less contracted here on the US dollar index, way more contracted here. And of course, you don't expect, it's not unusual when you see this in an ending structure. It's not unusual, because with 4 to 5, you might see some truncation. So let me still show you what I meant. Let's go to this. This is the height of 3, and this is 4, and this is what we still think the third of 5 is, and this is the fourth. And we have not actually pushed far ahead here of 3 here, and so we are seeing that it could get truncated. We could just slightly push beyond with 3 here before it ends. So that is what this one is giving us. And we are going to, because if you want to count this wave, you might be counting not quite well. So we need to see how to count. But one thing we do know is that from here to here should give us at least the extent of where this is going to get to. So which we said, this is the extent of where this thing can get to. We are going to look at the extension of 3 to 4 to the upside at 123 and 161.8 as the potential point of reaction. So if we do that from here down to this fourth wave here, the 123 it's actually here, and 161.8 is here at the red. Pushing it to the 50 is just because we are anticipating an extension, a little extension, so which will get to the top here. So we don't see DXY breaking the top really, but we are seeing probably we are looking at the potential reaction between here and this point. So based on what this is giving us. Now, let's now dig a bit deeper into the structure of the last wave that we are seen as the last wave. So now, third of 5 and potentially the fourth of 5. So after this is an ending structure of wave 3 here and here, the fourth and the fifth of that ending structure of wave 5 of 3 here. So, and we had the first reaction to the downside as A, B, and a C. Now we are seeing a break. From here, a reaction. If you look at it from the bottom here, the seller took it down right from this edge. They took it down, you can see 1, 2, and they came down here. Then they went up like this, 1, 2, to get to this point. So we are seeing this potentially as a wave 1. There is to this point as a wave 2, and probably we are seeing potentially a wave 3. Counting it like that is just, we are not sure yet. So we are going to wait until we begin to see what is happening here. So it's too early, it's too early to say this is 1 and a 2. But what we show us that we are out of correction really, and this is a potential 1, 2, 3 structure and not A, B, C, is the fate of this particular wave that is going up. The fate of this particular wave that is going up. Now, is this wave here, this correction here that we are seeing, the movement we are seeing here, is it going to go beyond 123 extension of what we assume to be 1 and 2 to the upside? So if it's at least more than 123, it's a good indication that it's turning to be a wave 3 of this particular move in this golden yellow. That once we get to the wave 3 and we do a 4, we might be seeing a 5. So trying to peak. So we have broken this point of the third of 5. So potentially we are seeing the last wave after the fourth. This agrees with fourth wave really. So once we don't break this to the downside, we should finish this. But if we should come down and break this to the downside, but we are seeing a higher high for now. From this, we have seen it higher, so we are going up. So how do we proceed here? So what we expect to happen really is this. What we expect to happen is this. From this point, which we term as the beginning, to this point that we say, okay, that is where potentially wave 1 has ended. Back to where we feel that wave 2 is, which is at this point. 161.8 is here. At least wave 3 should mark up here if it's not truncated. You must know that anything can happen here. It doesn't have to get to this point. It doesn't, and it may get here to at least stretch this as 1, 2, 3 to this point. And at this point, it could be seen as being completed. And this is 123 here, which coincide with what we saw on the 4-hour time frame as a potential 123. So these are areas that anything can happen. So if price gets to this point, it might just also fall for wave 5. It might just fall for wave 5 of this last ending structure, and before we see a bigger correction. So I still see us probably having movement, pullback, and drag and pull back until we sail to this area, and before we see a reaction to the downside. Now, that is on US dollar index. When we look at DXY, on the DXY structure, now this is what the DXY structure has given us. Now, these are broken. The third wave here on the US dollar index, it hasn't on the DXY. So we are saying that it's rather contracted on US dollar index, but the DXY is still yet to break the top. So, and these are properly in the blue box. If we look at the 4-hour time frame, also, do we have a break from the major 3? We'll see, because this is the last moment of 5, the 5th. Sorry for that loss in of network. Okay, so this is major 3 here, which is the 4, and so we are seeing the last wave, of course, breaking the top here. So the last has broken the top here, just like we saw for the DXY. So we should expect where this is going to turn around, also at 123, and from the top here of 3 down to the 4th. Potentially, we expect this is 123. Price had broken 123 here. This is 123, and this is potentially this red area is what we think a 161.8 may be from here to here. But we know that we can expect an extension to this point, and probably we don't expect it to break the top here. So this is what it happens at times when you are seeing that there might be likely an extension of a particular wave. Now, so we expect that this might be turning between here and here, maybe not more. But then the inside structure here, is what is going to dictate what is going to happen now. So clearly, this is 1 and this is 2 from here. After the correction of the 4th wave, we saw the ABC structure here to C1 and a 2 to this point. Actually, the first wave to the downside is here, A, B, and a C, because we're going to pick this low for 2 and probably pick this high for 1. So yeah, actually the ending structure is actually here. It's just the A, the B structure to complete it, and the C is what gave this height to us. And we're going to use that height to look at the extension here to here is correct for the 3rd wave. Very correct for the 3rd wave. Here is correct. I think it's correct also on US value base. So there's no doubt about the fact that this is the wave 1, wave 2, and wave 3 of the 5th wave, and that we are seeing this potentially as the 4, which is correct. So for me, we are seeing the 4th wave, and potentially this should be the last leg that we are seeing, which is about being completed. So now let's go inside there to look at it on a 30-minute time frame. So there's no doubt about the fact that this is the third of five, and this is the fifth of five, also almost touching the third here. It broke it on the US dollar index to the downside, which is more contracted and is most likely going to be truncated for the US dollar index. And here, this is the 50 retracement mark. That's the 50 retracement mark. So once we break it to the downside on the TXY, of course, we are seeing a clear divergence and momentum loss also. Now, we are seeing this because of what we saw on the US dollar index. There's a break out of 3 here, okay, but not yet here. So, of course, it does not mean that we can see this as A. Here is the last wave 5 here. You can see the last wave 5 here. We see this as 1, 2, 3. Sorry. We see this one as maybe a 1, a 2 here, a 3, a 4, a 5 of that with 5 of 3. Then we are seeing this as A, B, and a C to this point, to finish a 4, and we are seeing this reaction. So with this now, with a break to the upside here, so potentially this could mean a 1 and 2, and we are going for a 3. But it could still be an ABC. That's what I'm trying to say. Whatever they are going to play, you must not lose sight of your count here. Whatever is playing out here. So what we at least expect here is this to get past an extension of 1, 2, 3. Between 1, 2, 3 and 161.8 will mark up the third of the last of this wave, and at that point of the third wave in the golden yellow, we may begin to say, okay, yes, we are approaching the end of all this move. So the third point where we must at least focus now is what this one is going to give us in terms of an extension to make it sure to confirm is not an ABC, but a move to complete the third wave of this particular last structure. So, and 161.8 is here potentially. This is where we expect 161.82. Once we get here, then we are good to have seen the end of that. So this is very important for us. And again, if you want to look at this 3 to this point in terms of what we expect, or the area we should expect this to terminate, is from the top of 3 to the fourth wave here. So 161.8 is his extension 1 to 2 falls here, and it's just a bit outside of 1, 2, 3 extension. So this area, around this area, might just be where we might see the third wave, and we may have the fourth and a truncation here, just like we saw a fourth and a truncation of 3. So the fifth wave necessarily does not have to break the third. So anything can happen here. So it doesn't have to play to 161.8 extension or 1, 2, 3 extension. That's what I'm trying to say. It doesn't have to play to 1, 2, 3 extension all the time. So, in as much as it could even get truncated here and not break here, on this time frame, because this is the last wave, and this is where the manipulation and all of that would occur. You may not be able to finish up. So, but what we should be expecting is a price action to the downside any moment from now. We still go a bit or drag a bit to the upside. If it does that, it's a plus to still get something to come. So we should be focusing here. So on this time frame of the inside structure of the fifth wave, this is what 4 is giving us around this area and this area. But if you look at the major 3 and major 4, it's around this area and this area that is giving us. But our attention now is how do we get here first? And so once you reach this point, it's as good for what? As good of 1, 2, 3. So we need to still climb up. And if it's still an ABC, then we may be seeing this come to the downside, probably not break the bottom and go up again. But once we break the bottom and we break this area, then it has ended here. So this is the point that tells us the whole story has ended. This is the point. So it may not probably break this top, and it may break it. So we are watching. I think our order is around the third wave here. So let's look at the last instrument before we call it a day. Euro dollar. So looking at the euro dollar, it's still the same. So you can see that the euro dollar is actually more deep to the is more. So we can see that even if we expect that on the US dollar index, it has broken the third wave to the upside, to the upside of the US dollar index. On the DXY, it's about breaking it. And, and the third wave of this structure that we are seeing is way beyond on the DXY and US dollar index. But the third wave, the presumed third wave, is way even below here. It's way above it here. So this is the third wave here. And this one is way below, above it. So we might be seeing more of truncation on the euro dollar than on the all other ones. So we might be seeing a truncation that even the third and the fourth may not even go beyond here as a potential, the likelihood of that happening. So looking at this, if you pick that this is the beginning of 1, of course, this is the retracement of 5, so which structure didn't break. So if you take it down here, and where 161.8 is, it should be. So this is 161.8 here. So we can see clearly that the third in the black may just fall here, a fourth and a truncation, and price may begin to go. So we need to, this is where we want to trade. So we need to begin to focus on here. It may break, it may break low or not. So potentially this may just, cap here and begin to go up or slightly below it. So we need to watch this carefully. We need to watch this carefully. But at this point, once it gets here, you must know that your third wave is completed, of the last structure is completed. And you may just have a truncation and anything can happen here. So the level of our entry is still, I think, still good. And we are going to pay attention here. And they could probably flash it down like a week just to take people out. And but in terms of this structure, from here to 3 or to the last structure, what do we expect could happen? So looking at 3 to 4 here, from this purple, we are marked the 3 to 4 here now. So 1, 2, 3 extension is below here. And 161.8 is also at 05980. So what we are saying is that in as much as 123 extension is here and 161.8 is here, price may not even get to this area at all, based on the internal analysis that we've done here. So 1, 2, 3, 4, and a truncation. And anything can happen here, but at the same time, they could race down to get to this point. It doesn't really matter. So if you are seeing that move, you must know it's still allowed by the virtue of what we are seeing. But what we are seeing, the internal structure we are seeing here, does not tell us that that is going to happen, except this is still an ABC and a 1, not 1, 2, 3. But once we have this and coming to this point, it will make it a 1, 2, 3, really. If it doesn't get here, based on this, what we are seeing here, maybe an ABC correction. But if price should go up, break this top, it means they are done and price is going up. So a break here, from here to the upside tells us that price is now ready to go up. But we expect one more move to the downside to finish this properly before they go up. That is what we are seeing now. And we just need to continue with the count in this area. We need to continue with the count in this area. So this is the last wave, 1, 2, a 3, a 4, a 5 here of this last wave. This is the last wave and the 4 of the 5 wave, or the 4th of the 5th wave. Let's look at 4 hour again to align ourselves. You see, the 3rd wave has ended here. So we can see that 1, 2, 3, and the 4th wave. And in the 5th wave, which is properly this, we are going to count 5. Okay, we're going to count 5. Okay, so the X here is actually the 1st wave, where we see the X actually is now the 1st wave. And this is, or rather, okay, this is, okay, rather, this is the 3rd wave, and this is A, B, and a C. Okay, and this actually is wave 1, wave 2. So wave 1, wave 2, and a wave 3, a wave 4. So this is good for a wave 3. The length is good for a wave 3. This one is probably 1 and a 2, and a 3 and a 4. We are seeing the 5th wave. So the 5th wave may be truncated. That's what we're seeing. So this is the big picture of what we are seeing here. That's the big picture of what we're seeing here. And this structure is about ending, and we're going to, it may not break the bottom from what we are seeing. It may not break the bottom. And if it does break it, we know potentially that these are the areas here. In between this area and area, it's what the price can sell to. So we could stretch about how many pips below that recent bottom. We could just stretch about 34, 35 pips below it or not. So that's what we are seeing now. So what we just need a correction. So if the correction happens before the Fed meeting and we break up and we have a 3-wave correction, if they're going to start early and we have a 3-wave correction, so once we complete that correction to the upside, then the Fed meeting is going to bring it down. So whatever we want to see now, it's a deep correction, really, a 3-wave, at least a 3-wave correction to the upside before we come down. All right. That ends it here.